Hey guys, welcome back to the channel. It's Arab the Plug, and in this video I'll be talking about entries and exit strategies in forex and crypto trading. If you actually trade the forex or the cryptocurrency market and you want to make the best out of your trade, it's actually very important that you have some strategies that you use to enter the market and that you use to exit the market. And when we talk about entry, one of the reasons why a lot of traders get it wrong with their trade is because they are actually not entering at the right time. Maybe they are entering earlier than they should, or they are entering later than they should enter. So probably when you enter earlier, that means sometimes you enter into the trade and the trade reverses against you, hit your stop loss, and it actually goes back into your direction. And also when you enter into a trade, it's sometimes when you enter late, it means that you enter into the trade and it just moves a little bit and reverses. That means you entered late. So it's actually very important for you as a trader to understand the concept of entry and exit, know when to enter, know how to time your entry so that you catch up with the market movement the best time you can, and you exit also, because when you talk of entry you have to talk of exit. So when you talk of exit, you talk of two things: stop losses and take profit, because both are exits. So if your stop loss gets hit, you are exiting because you are wrong, and your analysis is wrong, your projection is wrong, and you are losing money. And your take profits is more like, okay, where you exit when you are right. So talking about entries and exits, it's very important for you as a trader to understand that your entry model is what determines your entry model is like the kind of strategies you trade. So understanding entries and exits also has to come with the fact that, okay, how do you trade? What kind of concept do you trade? Do you trade order blocks? Do you trade support and resistance? Do you take demand and supply? Do you trade trend line and stuff like that? So for me, when it comes to entries and exit, I believe entries and exits should come at key levels. So when I enter the market, I enter at key areas depending on what I trade. So sometimes I enter at depending on demand and supply. Sometimes I look at concept like order blocks, support and resistance and stuff like that, or even trend line sometimes. So for me, I will look at some examples. In looking at the chart, I will look at some examples, and I'm going to practice with some examples so that we can all look at some of the best strategies or some of the best way to time your entries and exit the market. So now, the first thing I want to do whenever I'm entering a trade is actually confirming the bias of the market. So okay, when I have a chart in front of me, like what I have now, like Euro Canadian dollar charts on the 4-hour time frame, I confirm the bias of the market on the higher time frame. Okay, where is the market heading to? If you look at this chart, you will see that this market is actually a bullish market. We have a series of lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then we have a demand zone at this area, right? Like a demand zone here, right? And then the market actually moved from the demand zone and created a new higher high. So let's just draw that. The market moved from this demand zone, or we call it demand, we call it support, and we call it, and give us a new high at this point, then dropped back into this zone. So now at this zone, even though the market is higher, at this zone we look at two things, right? Because the first thing we look at is trend. Then after I look at trend, then I look at the lower time frame to see what is actually happening within the trend. Because when I look at the trends, I am much confident that in this kind of scenario, it's actually a buy trade. Like I'm looking for a buying opportunities, because it's like I don't want to be trading against the trend. So now, when I look at this kind of scenario, I look into the lower time frame to see what is actually happening within this area of value, because this is actually an area that the market has dropped into. But I can't actually trade on this area directly or at once when I see it, because I know the market might be creating a lower high to give us another high, or might just like want to play around this zone and either continue up or drop. So you as an intelligent trader, you don't jump into a trade because you feel the market has created a higher low, because sometimes it happens that the market comes back to this demand zone, right, before it continues higher. So to see what is actually happening in this zone on the lower time frame and be able to tell whether the market is ready to move or it is still maybe consolidating, or the market is just going to drop slightly lower. So I just like slip down to the lower time frame. So if you use the 40, if you use like the 4-hour time frame, you can like pick your entries on the 30 minutes, 15 minutes, depending on your strategy and the kind of thing trade you do. So right, so for me, looking at this, you will see that the market is trying to like create a consolidation. The market is creating a consolidation around this area of value. So right, so I'll just like wait for the breakout of the consolidation, right, or a little bit drop back into this. You can see that the market consolidated a little bit here, formed like a triple something like a triple bottom, then dropped back with a huge momentum candle. So what I just want to do here is that I will anticipate the market to drop back to this area where we have the triple top, just because this particular candle has a lot of bullish momentum in it. Had it been that the candle here is like maybe like even though it's a 15-minute candle, is going to close very soon, so I expect the market to drop back into this place, maybe give me a long weak candle to the downside, then I might time my entry at that, right? So one thing I understand about entry is that sometimes you don't get all the trades, but when you get the trade, make sure you get the best trades, because sometimes when you enter it, when you miss out on a trade, just because you want to get a better entry, it's better than just getting a very bad entry, because you don't just jump into a buy at this point because the market is like dropping back. Then you wait for it, maybe at the end of this 15 minutes, it's going to like create something like maybe a long wick telling you that the market just dropped back into this but reversed. Then you take a long back to this top, or probably be a little bit more patient and see if the market is like going to break below this. But for me, if I'm going to be taking a long for this market, because the market has already moved a little bit, I will anticipate a drop back into somewhere around this zone. The market drop back into somewhere around this zone, then give me a long wick candle, like a candle that has a long wick, signifying that market dropped but is about to like reverse and start moving up. Then I may be timing my entry somewhere around here and put my stop loss a little bit below the zone and target the highs. So this is going to be like a 1:4 risk to the reward trade. It's going to like be absolutely worth it, because you don't want to be taking a risk and you want to be targeting a reward that is smaller than the risk. So now here, if you get the market to like pull back into this zone, right, if you get the market to pull back into this zone, then you are going to be risking a little bit, very less compared to what you'll be having, because if the market tapped here and starts moving up again, it's going to like give you more reward compared to jumping into the market just exactly here when you don't even have certainty, because the candle you have here is actually bearish and you need a little bit of more confirmation, a little bit of bullish confirmation before jumping into the market. You don't want to jump into the market when you see a strong bearish candle like this, unless the market comes down, then gives you another indication that okay, it's just like a little bit of movement or a retracement, then you jump into it. Alright, so this example I just gave just complement the fact that I said whenever I want to enter a trade, the first thing is to look at the market bias, overall bias, which is the bullish bias, because I don't want to be taking a short trade at this point unless I have a situation whereby the market breaks below this area, retest or breaks below it with like a huge candle. Maybe I want to take a scalp back to this area. But looking at the direction of the market overall, I don't want to be taking any short trade at this point, because the market is clearly bullish and all we have here is the market giving us a series of higher highs and higher lows. So that is that about entry. So now, when you are timing your entry, when you are getting entries, one other concept you have to look at is exits. And exits, like I said earlier on, is in two phases. We have where you exit when you are long and where you exit when you are right. And the market is bullish, and I identify this place as an area of demand. This particular place is an area of demand, and this is like a minor area where the market reversed into before it probably continues moving up, if it does actually, because the market is more like a probability thing. So if you see, let's say the market now starts coming back so let's say you want to time your exit, which is more like when I time my exit, my stop losses are usually below areas of values where I am taking trade from. So this is where I was taking the entry from, right? Because I want the market to like tap in back a little bit into this zone and give me like a confirmation, a candlestick confirmation, like a long wick candle to the downside before I do. But that will be on the lower time frame. I'll actually switch back to the higher time frame now. So I want to place my stop loss just below here, because if the market comes below here and retests below here, I don't want to be going to any long trade, because that's clearly telling me that the market is coming back to this zone. Maybe you are probably long again back at this zone, right? And if I'm going to exit, I don't want to set unrealistic target and say, okay, I want the market to come to this place and I will take my profit here. It doesn't make sense, because you are a day trader. You are probably trading on the lower time frame. When you are taking your entry, you are taking on the lower time frame, and you are now targeting something as high as this. So I'm probably targeting the next area of value that market has retested, which is like the next resistance area or supply zone, and like that. And if eventually the market comes down back to the demand zone, then I'll be willing to take another entry, which is going to be a more and a higher probability trade, because I know if the market comes back to this zone and continues the bullish trend, then it's going to be like a bigger opportunity for me to probably catch a trade from this zone, put my stop loss just below this, and target the highs, which is going to be like a swing trade. Actually, it's not something that's like going to just happen in a day or two. It's going to be a swing trade, which might take like a few days, sometimes weeks, depending on the market movement and liquidity in the market. So simply made, when you want to enter a market, look at the long-term buyers, look at the higher time frame buyers. The market is bullish, you want to be looking for opportunities to buy. You want to be looking for opportunity to buy when you have an order block, you have a demand zone, you have a support that holds and stuff like that. So this is pretty much how I time my entries in the market. You just get into the market and enter anywhere. And even if I'm enter at a very risky position like this, especially on the lower time frame like this, as I explained earlier, I want to take a little risk and I want to make sure my reward is much higher. So if you got value from this video, ensure you hit the subscribe button, hit the like button, and share this with your friends, and I'll see you in the next video.